Hello, my name is Allison Archer and I'm a CPA in Henderson, Nevada. I've had my own business doing accounting, taxes, and bookkeeping since 2004. I received my undergraduate degree from University of Arkansas and I received my MBA from UNLV. Today, I'm going to give a brief overview of standard deductions versus itemized deductions for individual tax returns for the year 2021. Keep in mind, some of these amounts, some of these thresholds could change in future years. To get started, I just want to give an overview between standard and itemized deductions. The difference is simple math. A standard deduction is a fixed amount given to different filing statuses that they can claim against their income to arrive at their taxable income. Itemized deductions are filed on Schedule A, and there are a list of different components that make up these itemized deductions. So if you qualify and add them together and your amount is more than the standard deduction, you get to itemize your deductions on your Form 1040. First of all, I want to talk about the standard deduction amounts depending on your filing status. For 2021, single filers get a standard deduction of $12,550. Married filing joint or qualifying widowers receive $25,100. And head of household filers receive a standard deduction of $18,800. Keep in mind, if you are blind or over the age of 65, you get a slight increase to that standard amount. Now, if we talk about itemized deductions, I'm going to go over the high points. This is not an inclusive list, but these are the main components of itemized deductions. If the sum of all of your itemized deductions is greater than your standard deduction, you should itemize on your taxes, as it will save you tax dollars. Now, if we talk about the list of itemized deductions, the first item is unreimbursed medical expenses. That can include insurance, co-pays, prescriptions. It does not include over-the-counter medicine though. Now, before a medical expense can even get added to the itemized deduction, you have to take 7.5% of your adjusted gross income. So only the portion exceeding 7.5% of your adjusted gross income is included as an itemized deduction. So many times people do not get to deduct medical expenses because they are not over that threshold. You also get to add to that taxes. Now, the taxes that are included, and this is not an inclusive list, are sales taxes, property taxes, real estate taxes, state taxes. Now, we do not have state taxes here in Nevada, but that could impact someone who is filing an income tax return in another state that does have taxes. The one thing about taxes is it is capped at $10,000. So even if the taxes you have paid are $12,000, you can only include $10,000 of that added into your itemized deductions. The third component is mortgage interest. This includes mortgage interest on the first $750,000 of mortgage debt. The third component, or I guess fourth component, is charitable donations. This includes two components of charitable donations. You have cash donations, which could be to a church, to an organization that's a 501c3. You do need to keep records of any charitable donations that you make. It could also include non-cash donations. That means donations to Goodwill, Catholic Charities, Boys and Girls Club, any 501c3 organization. For a non-cash donation, you need to keep a record of what you donated, when you donated it, who you donated it to, and the value of the goods on the date you donated them. Now, there's another component, which is miscellaneous itemized deductions. Here in Nevada, the main thing included there are gambling losses. Keep in mind, you only get to include gambling losses to the extent of your gambling winnings. So, big picture, those are just the components, the major components of itemized deductions. Usually, you need to have a mortgage in order to itemize. Not always if you have a lot of charitable donations or a lot of medical expenses. So, in conclusion, just keep in mind you either get to take the standard deduction or the itemized deduction on your Form 1040. If you think you may be close to itemizing, I encourage you to seek the help of a tax professional so you can maximize your deductions. If you have additional questions, please go to www.irs.gov for additional information. Thank you and have a great day.